tomorrow, after 3 years of anticipation, Title IV of the 2012 Jobs Act will finally kick in, allowing regular people to invest in privately held startups via mini IPOs that can raise up to $50 million. Historically, only accredited investors, roughly 2% of the population, have been able to participate in these startups. But beginning tomorrow, private companies will be able to market themselves as investments to regular people, which means that popular brands will be able to raise money from their customers without actually going public. This is a huge deal, especially for SeedInvest, the free online crowdfunding platform that gives investors a chance to invest in extremely well-vetted startups. Up until now, SeedInvest was only for the small part of the population that count as accredited investors. But starting tomorrow, the rules change, and their platform will ultimately be able to help connect regular people with startups that are looking for funding. Now, yesterday, we got a chance to go off the tape and catch up with Ryan Feit, the co-founder and CEO of SeedInvest, about this major development. Take a look. So, Ryan, Friday's a pretty big day for SeedInvest. Tell me what's going to happen.
So we've been waiting a long time for this, Jim. And on Friday, for the first time, ordinary Americans are going to be able to invest in startups and small businesses before the IPO.
All right, so right now, I always hear people saying, well, how come I can't get in? How come I can't get in? That could change Friday.
Exactly. So historically, in order to invest in a startup, you had to either be a venture capitalist or an accredited investor, which is basically the wealthiest 2% of the country that make either $200,000 of income or have $1 million of net worth in the bank. And that's all changing now, where anybody can invest.
But we don't want people to put, I know you're a prudent guy, you don't want people to put 100% of the money in SeedInvest.
There are a couple things that every investor that is about to get into the asset class should know ahead of time. First of all, to your point, you should never invest more than 10% of your portfolio into private companies. And if you're going to invest in private companies, make sure you're diversified. So at least build a portfolio of 10 companies.
Okay, now for SeedInvest, in some ways, I think when we have a very successful show on our network, Shark Tank, in some ways, although they won't be able to influence the management, it allows people to play that role, right?
Couldn't agree more. So imagine being one of the viewers and watching Shark Tank and now being able to actually invest alongside Mark Cuban for the first time. That's what's happening.
All right, so how does SeedInvest make money?
So SeedInvest is free for investors. We don't charge any fees for signing up. We don't take any of the upside. We charge companies a small commission on whatever they successfully raise on the platform.
Now, how about if the companies say, listen, we don't want to deal with you. We deal with these big Silicon Valley guys. We don't need SeedInvest.
So the thing that companies have sort of discovered over the last couple of years is that even if they are looking to raise from a prominent venture capitalist, there's a lot of value to opening the round up to individual investors who can also add a lot of value. And we actually get most of our deals from venture capitalists and angel groups, and we get individual investors in at the same terms.
All right, so what is it, someone probably said, well, what's the exit look like? How do I make my money?
So this is actually important.
Okay.
It's not like investing in a public stock. So although there will be a secondary market that develops over time, for people getting in right now, you should be in it for the long haul. So plan to invest for 5 to 7 years into a company before they get acquired or they IPO.
Is there an actual lockup, or is that just the way you'd like
So actually, part of the law, companies would allow investors to sell their shares the next day, but a robust secondary market just has not developed yet, but it will happen.
Okay. How do we protect ourselves? How do we know that these companies are real? They're not going through the typical long-term process, fly-by-night versus not fly-by-night?
Yeah, so there are a couple important protections that were part of the legislation that was just passed. First of all, any company that's looking to raise from ordinary Americans needs to actually file a disclosure document with the SEC that includes a business plan that needs to get approved. Second, they need to have their financial statements reviewed or audited by a third-party accounting firm. They're expected to go through a platform like SeedInvest that is vetted and also regulated like a big bank. And then lastly, there's limits on individual investments.
Do you think that you'll have relations with various brokers so that you will be the guy when someone says, listen, I really want to get in the private thing? Do you at your own company have a way to do that? Well, I don't think most do. I think that many will have to go to SeedInvest.
Yeah, so we've actually had a lot of brokers and registered investment advisors reach out to us and figure out how they can get their clients into these private companies that are pre-IPO. So it's something that I think over time we will develop more and more relationships so that we can get more investors into private companies.
Any companies that we may have heard of that we would know?
Yeah, so we've actually 2 companies that we invested in recently I can tell you about.
Okay.
The first company is a company called Patch of Land. They're a real estate investment platform that allows investors to get into real estate online. They've actually funded about $24 million into 109 projects. We invested in them about 6 months ago, and they've since raised a $23 million round, and they've grown from 10 employees to 40, so they're doing pretty well. There's another company called DietBet, which is a online social dieting platform. So, Jim, if you and I wanted to bet $50 that we'd lose 4% of our weight over the next 4 weeks, we could even invite the viewers to bet as well. Whoever wins, whoever loses 4% of their weight, splits the pot at the end. So we invested them 2 years ago when they had a couple thousand users. They now have 270,000 users.
Really?
270,000 users who have lost 3 million pounds and 12 million
So this could be something like Under Armour's got that Map My Fitness. I mean, someone might just say, listen, this is a growing social community. I want to own it. And then SeedInvest people would win.
I think that's their exit, yeah.
Jeez. Okay, so one last question. Does it matter how you think how the economy does, or is this just the kind of things that it's not that economic sensitive?
So I actually believe we have a great opportunity when the economy, if the bull market does run out and there is sort of a downturn, venture capitalists are going to have a tough time getting more capital. And I think we're really well positioned to help these strong, growing companies at that point.
Right, because I know you do need a robust IPO market eventually, but
Agreed.
if 5 to 7 years doesn't matter.
Agreed.
All right, well, this is very exciting. Friday, everything changes. For you, perhaps if you want to get into some of these Shark Tank-like deals, that's Ryan Feit. He's the co-founder and CEO of SeedInvest. All very exciting. Government's finally letting everybody in. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.